The tech industry is booming. It's everywhere, from the phones in our pockets to the cars we drive. This growth is fueled by data, the lifeblood of the digital age. Every click, search, and stream generates massive amounts of data, and that data needs a place to live. That's where data centers come in. Think of them as giant warehouses filled with servers, the brains behind the internet. These centers store and process information, making it possible for us to connect, communicate, and do business online. But within the vast tech landscape, there's a sector that often gets overlooked. Data center REITs. REIT stands for Real Estate Investment Trust. Two major players in the data center REIT space are Digital Realty Trust and Equinix. In this head-to-head showdown, we'll delve into the world of Digital Realty and Equinix. Digital Realty Trust, often shortened to Digital Realty, is a behemoth in the data center world. Founded in 2004, the company quickly established itself as a leading provider of data center solutions. Their strategy? Build massive, state-of-the-art facilities in key locations around the globe. These facilities cater to a wide range of clients, from Fortune 500 companies to startups. One of Digital Realty's key strengths is its global reach. They have a presence on 6 continents, giving them an edge in attracting multinational corporations. Over the years, Digital Realty has grown both organically and through strategic acquisitions. This two-pronged approach has allowed them to consolidate market share and solidify their position as a dominant force in the industry. Investors have flocked to the stock, attracted by the company's strong track record of delivering consistent revenue and dividend growth. Equinix, founded in 1998, takes a slightly different approach to the data center market. While they also operate large facilities, their focus is on interconnection. Think of Equinix as the crossroads of the internet, where different networks and businesses connect and exchange data. Their data centers act as hubs, facilitating seamless communication and collaboration between businesses. One of Equinix's key innovations is the concept of interconnection platforms. These platforms provide a neutral meeting ground for businesses to connect directly to their partners, customers, and cloud providers. Equinix, like Digital Realty, has a global presence. They operate over 240 data centers in more than 65 metropolitan areas across the Americas, Asia Pacific, and Europe. Equinix's unique approach to interconnection has been a key driver of their success. Digital Realty's story began in 2004. Amidst the growing demand for reliable data storage and processing power, the company's founders recognized the internet's explosive growth and the need for specialized infrastructure to support it. They set out to build a different kind of data center provider, one focused on scale, reliability, and customer satisfaction. In the early years, Digital Realty concentrated on establishing a strong presence in key US markets. They built large, purpose-built data centers designed to meet the demanding needs of enterprises. As their reputation for quality and reliability grew, so did their customer base. Digital Realty attracted a mix of clients, from Fortune 500 companies to fast-growing tech startups. In 2006, Digital Realty took a major step forward by going public. Section 2, Strategic Acquisitions and Global Expansion. With a solid foundation in the US, Digital Realty set its sights on global expansion. They recognized that the need for data center capacity was a global phenomenon. To achieve their global ambitions, Digital Realty adopted a two-pronged approach: organic growth and strategic acquisitions. One of Digital Realty's most significant acquisitions came in 2017 when they purchased DuPont Fabro's technology for $7.6 billion. This acquisition was a game-changer, adding a portfolio of high-quality data centers in major US markets. Digital Realty's global expansion continued throughout the 2010s and into the 2020s. This global reach has been a key differentiator for the company. Section 3, Navigating Challenges and Embracing Sustainability. Digital Realty's journey has not been without its challenges. The data center industry is highly competitive, with new entrants and evolving technologies constantly reshaping the landscape. One of the biggest challenges facing data center operators is the industry's environmental impact. Digital Realty has taken a proactive approach to sustainability, investing in renewable energy sources and implementing energy-efficient technologies. They have set ambitious goals to reduce their environmental impact and have been recognized for their sustainability efforts. Another challenge for Digital Realty has been adapting to the evolving needs of its customers. Digital Realty has responded by developing new products and services tailored to the needs of cloud providers and enterprises. Section 1, from network hubs to interconnection pioneers. Equinix's journey began in 1998, at a time when the internet was rapidly evolving. The company's founders recognized a critical need, a neutral meeting point for different networks to connect and exchange traffic. Equinix envisioned a different approach, creating neutral data centers where multiple networks could collocate and interconnect seamlessly. This concept of network neutrality would become a cornerstone of their business model. Equinix's first data center, opened in Silicon Valley in 1998, quickly became a hub for network interconnection. Telecommunications companies, internet service providers, and content delivery networks flocked to Equinix's facilities. This early success validated Equinix's vision. Building a global interconnection platform was essential as the internet continued its exponential growth. Equinix recognized the need to expand beyond their Silicon Valley roots. They embarked on an ambitious plan to build a global network of interconnected data centers. Through a combination of organic expansion and strategic acquisitions, Equinix rapidly extended its reach. This global expansion transformed Equinix from a regional player into a global interconnection powerhouse. Their data centers became critical infrastructure for businesses operating in an increasingly interconnected world. Equinix's focus on interconnection extended beyond simply providing physical space and connectivity. Riding the wave of digital transformation was key. The rise of cloud computing, mobile devices, and the Internet of Things brought about a period of unprecedented digital transformation. Equinix was well positioned to capitalize on this trend. Their global interconnection platform had become essential infrastructure for businesses undergoing digital transformation. They continued to innovate, expanding their offerings to include services like edge computing and bare metal as a service. Equinix's journey from a network hub provider to a global digital infrastructure leader is a testament to their ability to anticipate and adapt to the evolving needs of the market. Now let's talk numbers, the language of Wall Street. As of today, May 24th, 2024, Digital Realty, ticker symbol DLR, is trading at, well, you can check the ticker tape for the up-to-the-minute price. But remember, the stock market is like a roller coaster, always going up and down. What matters more is the long-term trend. Digital Realty has been a steady performer over the years, delivering consistent revenue and earnings growth. This stability is attractive to investors, especially those seeking a reliable income stream. Digital Realty has a solid track record of paying dividends to its shareholders. They've consistently increased their dividend payments for over a decade. Digital Realty's strong market position, consistent financial performance, and commitment to dividend growth make it an attractive option for investors. Section 2, Equinix, EQIX, stock performance and dividends. Now let's turn our attention to Equinix, ticker symbol EQIX. Like Digital Realty, Equinix is a publicly traded company. Equinix has been a Wall Street darling, known for its strong growth and innovative business model. Their focus on interconnection has positioned them at the heart of the digital economy. Equinix has been paying dividends for several years, though their dividend yield is generally lower than Digital Realty's. This reflects their focus on reinvesting profits back into the business to fuel future growth. Investing in Equinix is a bet on the continued growth of the digital economy. As with any investment, it's crucial to do your homework, understand the risks involved, and make sure it aligns with your investment goals. Section 3, head-to-head, comparing dividends and stock prices. When comparing the dividend yields of Digital Realty and Equinix, remember that a higher yield isn't always better. It's essential to consider the company's overall financial health, growth prospects, and dividend payout ratio. Digital Realty, with its longer history of dividend increases and higher dividend yield, might appeal to income-oriented investors. Equinix, with its lower dividend yield but stronger growth potential, might be more attractive to growth-oriented investors. Ultimately, the best investment choice depends on your individual financial circumstances, risk tolerance, and investment goals. Before making any investment decisions, consult with a financial advisor to ensure it aligns with your overall investment strategy. Section 1. Financial health and stability. When sizing up two companies, it's like checking their vital signs. We want to see who's in better financial shape. One key metric is the debt-to-equity ratio. Think of it as how much debt a company is using to fuel its business compared to its own money. A higher ratio can mean more risk, but it can also mean they're aggressive in pursuing growth. Digital Realty, with its long history, tends to have a higher debt-to-equity ratio than Equinix. They've been around the block, using that leverage to make big acquisitions and build out those massive data centers. Now, Equinix, they're a bit more conservative, focusing on organic growth and strategic partnerships. Both companies have strong balance sheets and investment-grade credit ratings. This financial stability is crucial, especially during economic downturns. Section 2, growth strategies and market positioning. Digital Realty and Equinix, they're both in the data center game, but they play it a little differently. Digital Realty, they're like the landlords of the digital world. They build these massive data center campuses and lease out space to big corporations and cloud providers. Scale is their game, offering that wholesale approach. Equinix, they're more like the connectors, the facilitators. They operate these interconnected data centers where businesses come together to link up, exchange data, and build out their digital ecosystems. It's all about interconnection and enabling that digital transformation everyone's talking about. Now, the cloud, that's the big kahuna in the tech world these days. Both companies are riding that wave, but Equinix, with their interconnection focus, they're particularly well positioned. They're like the grand central station of the cloud, where all the major providers come together. So who's got the edge? Well, that depends on the market conditions and how these trends play out. Digital Realty, with their scale and cost advantages, they are in a good spot to capitalize on the continued growth of data consumption. And Equinix, they're the go-to player for businesses looking to navigate the complexities of the cloud and build out their hybrid IT strategies. Section 3, risk factors and future outlook. Listen, no investment is without risk, and the data center sector, it's got its own set of challenges. Competition, that's always a factor. New players are emerging, trying to grab a piece of the pie. Plus technology, it's always evolving. What's cutting edge today might be obsolete tomorrow. Another big one, the economy. When businesses are booming, they're spending big on tech infrastructure. But when times get tough, they might tighten their belts, and that could impact demand for data center space. Digital Realty, they're exposed to risks related to customer concentration. They've got some big fish in their ponds, and if one of those big clients were to jump ship, it could make a splash in their financials. Equinix, they're more diversified, but they're still vulnerable to economic downturns as businesses might scale back their interconnection spending. So what's the outlook? Well, the long-term trends for data centers, they still look good. Data consumption is only going up, folks. The cloud, it's becoming ubiquitous. Both Digital Realty and Equinix are well positioned to benefit from these trends, but they'll need to adapt, innovate, and continue to execute their strategies to stay ahead of the game. Section 1. The Data Center Duopoly, a recap. All right, folks, we've journeyed deep into the world of data centers, those digital fortresses powering our online lives. We've sized up two titans, Digital Realty Trust, DLR, and Equinix, EQIX, tracing their histories from scrappy startups to industry heavyweights. Remember DLR, they're like the real estate moguls of the digital age, building massive data center campuses and leasing out space to the who's who of the tech world. They're all about scale, reliability, and that steady income stream, just like a well-managed apartment building. Then there's EQIX, the master connectors. They're all about bringing businesses together in their interconnected data centers, facilitating those high-speed handshakes that make the internet hum. They're less about square footage and more about strategic locations like those bustling internet crossroads where everyone wants to be. We've dug into their financials, comparing debt loads, dividend payouts, and those all-important growth prospects. We've seen how they're both riding the wave of cloud computing, each with their own unique approach. Remember, there's no one-size-fits-all answer in investing. It's all about finding the right fit for your portfolio and your risk tolerance. Section 2, investing in the future of data. Now, let's be clear, this ain't about picking a winner. Both DLR and EQIX are solid companies, leaders in a sector that's only going to get bigger. Think about it, every time you stream a movie, send an email or hail a ride, the data's got to live somewhere. That's where data centers come in. They're the backbone of the digital economy. Investing in DLR or EQIX, it's like buying a piece of that future, that unstoppable wave of data creation and consumption. But remember, no investment is a sure thing. The tech world moves fast, competition is fierce, and new technologies can emerge to disrupt the game. That's why you got to do your homework, folks. Read those company reports, listen to the earnings calls, and stay informed about the trends shaping the industry. Are we moving towards a world dominated by a few giant cloud providers? Will edge computing become the next big thing? These are the questions investors need to ponder, and don't forget about the macro environment. Interest rates, inflation, geopolitical risks, these all play a role in how stocks perform. It's like the weather, you can't control it, but you can prepare for it, adjust your portfolio accordingly. Section 3, the final bell, DLR versus EQIX. So the final bell rings, who comes out on top in this data center showdown? Well, it's a split decision. For those income-oriented investors, those seeking a steady dividend stream from a well-established player, DLR might be your pick. They're like that reliable blue-chip company paying out those quarterly checks like clockwork. But for those growth-minded folks, those who believe in the transformative power of interconnection and the continued rise of cloud computing, EQIX might be more your speed. They're like that fast-growing tech company, reinvesting profits to expand their network and capitalize on emerging trends. Ultimately, the best investment strategy is one that aligns with your own individual goals, risk tolerance, and time horizon. Diversification, folks, don't put all your eggs in one basket. Consider a mix of investments, different sectors, different asset classes to weather those inevitable market storms. And one last piece of advice, don't try to time the market. No one can predict the short-term ups and downs. Instead, focus on the long game, invest in companies you believe in, and let the power of compounding work its magic. Remember, in the world of investing, slow and steady often wins the race. Now go out there and make some money.